KPIT is the one that's on our radar right now. The company posted a 4.8% dollar revenue growth in Q2 with margins seeing a sequential decline. But more importantly, the company has gone ahead and raised their FY23 organic growth outlook to 23% versus 18 to 21% band that they had earlier. Kishor Patil, the co-founder, managing director and CEO of KPIT, joins us now to talk about that. Mr. Patil, good morning and thank you for joining us. Greetings of the season to you. First, on this organic growth guidance that you increased to 23%, can you explain what led to this?
Yeah. So, good morning to you. And as you know, we are operating into the only environment of mobility. And in the mobility too, we are really focused more on working with the large OEMs, mainly in our T25 clients. Within that, we are largely focusing on their software-defined vehicle programs, which are very critical for their, if I have to say, for their success in future. And that's where KPIT has a very differentiated offerings, very differentiated positioning, and we are arguably the leader in that space. I think that is allowing us to drive the growth, and that you can see from the deals which we have closed and the pipeline being one of the best for us. I think that gives us that confidence to raise that thing. And as you know, during the quarter itself, we have won another 5 reasonable engagements. So I think with all all the conversations, deal wins, pipeline gives us that confidence.
So this deal win, right? You're saying that you're engaging with a lot of the large OEMs. Do you think your deal win TCV can pick up further from the current rate? I mean, it's currently about $142 million on an average.
Yeah.
Can it get much better than that in the quarters to come?
Yeah, I mean, the point is, what is happening is our type of engagements with these OEMs is changing from where we have been engaging with a project, then to a program. Now we are engaging with the platform, and we are engaging at the architecture level and the program and the platform. So our overall engagement, the quality of the engagement is increasing, and overall the deal sizes, more multi-year deals, more ownership of the whole program. That is how it is coming. That gives us the confidence, and that's why our pipeline is also high. So to your point, yes, we could win some of those.
Mr. Patil, what about pricing and margins from here out? Will we see? Is there a possibility that, I mean, contrary to what we're hearing elsewhere in the IT services space, in the segment that you operate in, pricing actually can get better as revenues are for you?
Yeah, I mean, if you really look at for this year, at the beginning of the year, we had given this outlook for growth for 18.5 to 21% and EBITDA margin of between 18 and 19. And you may recollect there were a lot of questions in terms of whether you can do the growth, whether the margin pressure will be there, how it will happen. Fortunately, we have come a long way, and we have increased both the guidance for top line as well as bottom line. I mean, from 18 to 19, we have moved from 18.5 to 19. I do believe there are many reasons why this can improve, but I guess we'll cover that at the end of the year when we give outlook for the next year.
No, Mr. Patil, but is there a number out there? Because a few years ago you were doing early teens. Now you're almost at the late teens, going into 20%, which is spectacular. Do you have a broader term horizon where you want to take the margins high even from here? If you have that table up, you could pull it up. And also, everyone's worried about Europe. But for y'all, Europe has done very well. Good growth on the top line. However, US has seen a bit of a slowdown. Explain that to us.
No, I think there are, a quarter is not necessarily the best way to look at it. If you look at year on year, US has grown. But more importantly, if you look at the wins during the year, out of 5, 3 wins are in US. So actually, we are on in line with our business plan. We'll do the growth both in US as well as Asia. Our T25 clients are also spread out. So we don't see that specifically, but let me put it like this. We were a bit surprised by Europe, the growth momentum. and
Okay.
it continues very strong.
So-
So we are on our course for US, we are on our course for Asia, but Europe we have exceeded the.
But are there some challenges that are creeping up for Europe, and also the margin picture, sir? Can you get to the 20% mark? You know, you've been constantly improving on that front. 20% on the cards for the coming year. That's for FY24.
I don't want to give a particular date because we always look at it at the beginning of the year. But in next couple of years, for sure, we'll get there. Yeah, let me put it like this at this point of time. The reason is, I will tell you also, explain that this year itself, right, we spent and invested so much into people side. Our increments were all-time high, double digit globally. You know, where US, Europe, the numbers used to be very low to medium digits. So basically, you have to decide where you are going to invest, and then decide. Not necessarily you are only driving the margin, right? So you have to take a holistic view of the business, see where the investments are required. How do you drive the growth? So from that perspective, absolutely to your point, 20% is not out of bound. When we will do it, we will we'll give the outlook beginning of every year.
Okay.
And naturally, we have a line of sight to that.
Sure. That's big, 20% margins that you can touch over the next couple of years. I'll come back to Europe in a bit. I had a follow-up there, but lest we run out of time, also wanted to ask you what the plan is with the cash, because you had that large Technica acquisition, so perhaps you're not looking for any major one in the near future. You can correct me if I'm wrong. If not, what do you plan to do with the 960 crores on the books?
No, I think the 960 crore we have, but I think we have done this acquisition. We have to pay the payments more than 80 million euros. So actually, we'll now get back, what we have done best over last 3-4 years, get the cash up again. I think we are comfortable with 500, around 500 crore, 450 to 550 crore is a cash comfortable for our operations. So we will have to take it up in next 2-3 quarters. That's what we will focus on.
Okay. Just one more follow-up on Europe, because even the last time when we spoke, you said that, yes, there is a problem in Europe, but you're not too concerned. And of course, then you went ahead and did this 14% growth. But do you think that in the quarters to come, you may not be able to sustain this kind of high teen or teen growth that you're seeing in the European vertical, purely because of the energy crisis, the escalating problems there?
We are completely aware, of course, of the economic environment. We are aware of the challenges our clients are facing. What we are, we are mindful of it. And the good part is we have more demand coming our way. So we know that something becomes soft anywhere. We have other places where we can go and provide services. But absolutely right now, all our clients are, our focus is on T25, and we see that traction. One thing I can see is, as I mentioned, the areas in which we are engaged and the positioning which we have, very differentiated position, that allows us, in my view, even if they cut down on spend, I feel they will prioritize spend and will get a higher share of the business. That is what we believe, and that is how we see it in some clients.